Greetings and welcome back to our monthly market update. We just received the Feb 2026 numbers from the TRREB, and if I had to summarize this month in one phrase, it would be tighter conditions in a cooling market. While we are seeing fewer transactions compared to last year, something very interesting is happening behind the scenes with the supply. Even though sales are down, the number of people putting their homes up for sale is dropping even faster. This is creating a unique tension in the market that every buyer and seller needs to understand. Let's go into details. First, let's look at the volume. There were 3,800 plus transactions reported this Feb. That is a 6.3% decrease compared to Feb of last year. Normally, fewer sales might suggest a slower market, but look at the supply. New listings plummeted by 17.7% year over year. Because listings are falling at a much sharper rate than the sales, market conditions actually tightened. We are seeing a trend where the lack of inventory is keeping the market more competitive than the sales volume alone would suggest. If this inventory trend continues through the spring, we could see increased competition in the coming months. Now let's talk about the number everyone watches, the price. The average selling price in the GTA is now shade above million. If we look month over month, there was a 3.7% increase. Some areas saw much steeper drops than the GTA average. For example, in the city of Toronto, districts like Newton Brook and Willowdale saw prices dip by over 16%. Over in the West, Caledon recorded a price drop of over 14%. And Mississauga saw a double-digit decline of 12.7%. Meanwhile, in York region, areas like Aurora saw significant corrections of about 12.6%. It is definitely a fragmented market depending on which municipality you are on. Let's talk about some economic indicators and what's driving this. The economy is in a bit of waiting game. Inflation cooled to 2.3% in January, and same rate held through Feb. The BOC's overnight rate remains at 4.5%, with fixed mortgage rates currently averaging around 3.5 to 3.7%. There are over 100k potential buyers sitting on the sidelines right now. According to TRREB's chief market analyst Jason Mercer, these buyers are waiting for two things: for prices to finally level off and for some positive news regarding trade. Once that confidence returns, TRREB expects substantial momentum in the second half of 26 and into 2027. What does this mean for you? For sellers, you have less competition because new listings are so low, but you must be realistic about the 7% price dip we have seen over the last year. For buyers, there is a window of opportunity here with lower prices and less competition from the 100k people currently waiting on the sidelines. As always, if you want to know how these numbers affect your specific neighborhood or property value, reach out and let's chat. Thanks for watching, and I'll see you next month for the March review. Take care.